Good morning, everyone, and welcome to our webinar, NGL Updates, Enhanced Coverage and Easy Exchanges with Ames Don Erickson and NGL's Larry Moore. Today's webinar will be recorded and then later posted on our website. This does mean that all attendees will be automatically muted so that we get a quality recording. If you have any questions, go ahead and type them into the chat box and we'll try to answer them throughout the presentation. But if we're unable to get to all the questions, we'll have a member of our marketing team reach out to you individually to make sure you get that answered. And with that, I'll hand it over to Don so that we can go ahead and get started. Take it away, Don.
Thank you, Jordan. Good morning, everyone. Thank you today for joining us on this great morning. It's sunny, shiny here in Yakima. We're very pleased to have a special guest with us today, Larry Moore with NGL. Today we're going to be going pretty much get the first look into NGL's updates on their product and new enhancements. And Larry's been around for a long time. He actually worked in the office with us. Some of you may know that. Has been through this industry inside and out, and getting some of these new things that are coming out with NGL. It's going to help us tremendously, I would say. With that, Larry, good morning. How you doing?
I'm doing great, Don. Good morning to you, and thanks for having me.
No, great to have you. We're going to kind of jump in. I know we're on a time thing with what you have and we have, and we're pleased that you could join us today on your schedule that is very busy. So if you have anything you want to say before it, or if we want to jump right in, it's nice to have you here. Kind of a friendly voice that we know from the past and everywhere. And working with you has always been a pleasure.
Well, thanks, Don. I feel the same way about you guys too. There's a soft spot in my heart for AIM for sure. So yeah, out of respect for everybody's time, let's just kind of jump right into what's going on. Good morning, everyone. And what I'm going to talk about today is something that NGL has filed as a new product. It's significantly better. Not that what we have isn't good, but what we have filed is something I think you'll all really like. What's most important, and I'll just underscore this right now, is that when I share with you the states that the new product has been filed in, once it's approved, any business that you have written with NGL as of May 1st is eligible for a guaranteed issue exchange into the new product once it's available. And then every state thereafter, as they get approved, there will be a 60-day window where you can also, again, exchange the existing product to the new product without proof of insurability. We'll talk more about that later. But I'm also going to kind of remind you of some of the strong points about NGL that hasn't changed, and we'll get right into that right now. If you're not familiar with NGL, we really have what I consider the best of both worlds, and this just stems back from my experience of 32 years in the business and witnessing what has happened in our industry with many carriers in terms of premium and stability, and many big names that have left the market, carriers who I've worked with, like Prudential and John Hancock, for instance. So with that being said, what do I like about NGL, and what do I think is important to keep around? First of all, we're not a young company. We've been around over 100 years. We're a mutual company. But the good news is we are new to the LTC business, and I'll explain why that's important. A-rated company, over $5.02 billion in assets, over 1.27 million policyholders. So we're not a tiny company. We're not a huge company either, but we've been around a long time. When I talk about us experiencing what I call the best of both worlds, the fact that we were late to the dance in the LTC space is really important. We entered the market in 2016, but we benefit from the learning curve that our industry has painfully gone through. And I mean from the point of understanding how to price the product correctly and price for profitability right from the beginning. So entering the market in 2016, we priced with pretty much a next to 0% lapse assumption, which is the number one place all of our competitors have gotten in trouble in the past. We also were priced for a terrible interest rate environment. Back in 2016, the United States Treasury was trading at about 100 basis points, or barely 1%. And that low interest rate environment permeated the industry for almost 20 years. Well, we priced for that environment and witnessed where we are today. So as a consequence to all that, the current product we have available on the street is incredibly profitable. and we only have 5 active claims on the books so far. So the financial position we enjoy is unlike any of our other competitors, quite frankly. So with that, you might thinking, my goodness, if they only have 5 claims, active claims on the books, does NGL even understand what on earth it's doing? And that's where the second piece of the best of both worlds comes to play. We're partnered with a third-party administrator who has been administering and pricing and paying claims for multiple companies for over 30 years. It's called LifeCare. LifeCare is a very experienced claims payer, also a very experienced administrator to the business. And what I like so much about our position with LifeCare is that I, as a wholesaler, for instance, can help Don very quickly solve challenging problems right away for you that I really couldn't do with other carriers because of the relationship they have with Illumifin. So our third-party administrator, LifeCare, gives us an opportunity to be very hands-on in supporting your business and working directly through Don for that. So that's really kind of the important piece to us. New to the business, priced right from the beginning, and as a result, administered in a very hands-on way, which we love. So with that, what's happening? Well, we filed a new product, and I think you'll like the new product. You may not see it available until probably late August, if anything. But nonetheless, what I want to do is remind you of all the things we have right now that are strengths that will not change. We will continue to offer a joint product for couples, and our definition of a couple is very broad. So, any kind of couple you can imagine, mother, daughter, father, son, a traditionally married couple, domestic partners, people just living together, as long as it's under the same roof and the individuals are sharing in their living expenses, that is a couple in our book. And we dominate that business. Also, we have what I think is a superior solution to the typical shared care options. We have a third pool that a couple can share and simply add as a rider to their joint policy. And basically, the value of that shared pool is equal to what each individual currently owns. And the reason that's important is that when we see a typical shared care benefit out there, say for instance, with Mutual Omaha, it is a great way to extend benefits to an individual who's exceeded the value of their contract for claims. But the problem with that shared care option is that it allows the policyholder who's on claim to actually take benefits from their spouse or partner, reducing their policy. Ours is different. With a joint policy, we protect the integrity of each individual's benefits while they can then draw from a third pool, leaving them in a much better position in terms of protecting the value of the benefits. We currently offer a 2, 3, 4, 5, and 6-year benefit, as well as a lifetime option. Now, the lifetime option is going to go away for a couple of reasons. One, we never sell it. We're not priced very well for the lifetime benefit option. So we decided we'll allow that benefit to sunset along with our single pay option. We did that because the trade-off to us for the new product is if we're going to shed the unlimited risk from our portfolio, that gives us a lot of latitude in terms of how to price the new product, which I'll share with you in a few minutes. Of course, we still offer the 90-day and 180-day elimination period. That will not change. So what you see here remains the same. It's the incredible strength that we already enjoy. But going to the new product, we're going to take before I go into that, I want to take a deep dive into the third pool just to make sure everybody on this call understands what it is. First of all, our joint product. That's what it is. Each individual will own the same amount of benefits between the two of them. So if insured one has a 3-year, $200 a day plan, insured two will also have the same thing, right? And the integrity of those benefits will always remain with each individual. The third pool is a great addition. The benefits in the third pool will match what each insured has. So if each insured has a 3-year, $200 a day plan, for instance, then the shared benefit will equal that amount. So if insured one goes on claim, utilizes the bulk of his benefits, and then dies, insured two would inherit whatever has not been used. And what I like about that is if you look in this illustration, it shows that, wow, insured one consumed the lion's share of that third pool. So the survivor has the latitude to decide if he or she wants to keep that rider and keep paying the charge for what's left, or maybe economically it doesn't make sense because insured one had a long claim. You can drop the rider, save 27, 28% on your premium and go that way. But here's the leverage that you enjoy when you think about that. If insured one utilizes all their benefits and call it a 3-year policy, and then uses all of the third pool, that individual had a 6-year policy. That's the incredible upside to what we call the joint benefit with the third pool, right? So that's the strength that we have with that option. I just wanted to make sure you all clearly understood that. And there's a few more slides at the end I can share if there's any further questions about it. So with that being
Larry,
said, yeah.
So a quick note, I'm going to jump in just for a second. So on that shared benefit, it grows the same as the other two if you put in whatever percent for inflation, correct? So it's going to grow with their separate policies. So they're each going to have their pool, basically, their benefit. But that third, basically, bucket or pool of money, it's going to grow just like theirs is. So it's going to grow the same. So you're going to have that benefit for each. You can use it all, but it's going to grow also. It's not going to stay at the benefit when you start unless you don't put in the inflation.
Exactly. That's exactly right. So if you imagine you got 3 pools, insured one, insured two, and then the third pool, the shared pool, they all grow. So that's an excellent point you raised, Donnie. Appreciate you bringing that up.
Yep.
Okay, so let's go into what's new. And I think you'll like what you see. We're moving away from the daily benefit to a monthly benefit, maximum $12,000 a month. We currently have a service day elimination period, which, it's okay, but the calendar day method is more advantageous to the policyholder. So in other words, for every day of care you need in a 7-day week, knock 7 days off that elimination period. So that's a great change that we've made. Not that a daily benefit is bad, and I will tell you, some agents, I think, maybe make too much of a point of that, but understand that when the care provider and or the family knows that there's insurance available, they find a way to use it all up, trust me. We're adding more inflation riders. Currently, we offer a 3% and 5% compound. Now we're adding a 1%, 2%, and 4% compounding rider to the existing choices. What I like about that is that if you look at somebody who's trying to make it more affordable, you can scale down to a 2%, for instance, or you can actually sell more benefits and then throw a smaller elimination or a smaller compounding rider on that. Either way, it's going to give agents more choices to manage costs. Premium is now will now be based on current age, as opposed to what we offer is age nearest. I don't really care for how we do age nearest birthday because it prematurely inflates someone's age before they're the actual birthday. So we're going to go to actual age, which I like. We're also adding what we call a spousal or partner discount. So if you have a couple and one is declined, you can still offer an additional 5% discount to the healthy spouse. Or if you have just one individual who's applying because they know that their spouse or partner is not insurable, we're able to offer that discount, recognizing that that person is part of a couple. And the big one. Currently, our product offers a fully guaranteed 10-pay option, meaning that the premium will never go up while you're making the premium payments. We're expanding that guarantee to cover the entire product with the new product we're going to be releasing later on this summer. So the entire product is guaranteed for 10 years. I will also tell you this. The big question always is, well, what about pricing? Like what we've seen historically, when new products are brought to market, they always accompany a significant change in premium, typically 20, 30%. Well, because of the trade-offs we've made, shedding our lifetime option and shedding our single premium option, and the fact that we're enjoying such good profitability on the current product, we have the flexibility, since we don't have to worry about the legacy business haunting us from the past, to modify our pricing with the new product so it will be literally on par with what you currently have. Maybe a few percentage points higher with some cells and maybe a little less with other cells, but the pricing is going to be pretty much on par with what we have now, which is very unusual, and we're very excited about that. And as
So
I mentioned, go ahead.
Sorry to interrupt you. So on that 10-pay option, is that rate guaranteed for 10 years, or is it just on the lifetime for the 10-year rate guarantee? I didn't hear you if it was for
Good
the
question.
10-pay
So,
also.
yeah, that's a great question, Don. So when you look at our current 10-pay, the premium is guaranteed not to go up during the 10 years you're making your premium payments. And then, of course, once it's paid up, it's guaranteed for life. We can never come back for more premium after that.
Perfect. Yeah, that's a huge thing. I mean, we've all seen, different carriers that have increases, but to be locked in, if you can afford the 10-pay, which I tell you what, I've seen a lot more people looking at the 10-pay option, and to have that guarantee that they're not going to have rate increases after that, that's just another notch in the belt to help them to kind of make that decision.
That is right. And just as a reminder, the exchange offer. So any business in the states you see listed below, those are called the compact states. Any business that you have written since May 1st is eligible for a guaranteed issue exchange once the new product's available. And for states that you don't see in that list that may get approved later, we will offer a 60-day window from the date the product is approved to offer that guarantee issue exchange as well. The reason we start with the compact states is they tend to get approved very quickly because we only have to file with one entity that makes the approval decision for all of those states. So it's much quicker than the traditional state by state method. So that to me, this offer of exchange is huge because you can lock in insurability right now with what we currently offer, and giving your clients a choice to exchange the current product for the new one when it's available without any proof of insurability. Okay. Any questions on that, Don? You think we have, or shall we keep
so there, just a few things to make sure that are talked about. So is there anything on that first day coverage or the home health care waiver? Those still going along with the product? Where you can start day one instead of having the elimination. I didn't see those on there, but making sure those are still available.
That option is still there. Non-forfeiture is still there. We don't sell those options too often, but understand that, yeah, the elimination period applies to both facility and home care. So if you're at home, knocking days off that elimination period and then have to transition to a facility, you do not have to start another elimination period. It just feeds off the other.
Right. So a big key takeaways to this new one. I mean, these are huge things. That there's the couples discount. If it can be a family member or brother, sister, that kind of thing. That's a big thing if they're under the same roof. And then calendar days and also current age. Those are things that will turn heads too, just to know it. And then the exchange offer with people getting this product right now, and when the new ones come, that's it's like, why not? Why wait? Get it now, and then you just get the upgrades.
I agree. Locking in insurability is huge. If you were to wait for the new product and suddenly their health changed, then all bets are off. But the good news is I look at it, Don, as an opportunity. They can lock in someone's insurability now. And my advice would be to not tell people, hey, there's a better product coming. But what you can say, because it is true, that, yeah, what we like about NGL is as they make new offerings available, they'll make me aware of that. And typically you can exchange one product for the other without having to go through underwriting. So that's a fair statement to make. I wouldn't even worry about it. I think you could be a hero once the new product's out and call your clients and say, hey, you know what? There's a new opportunity here that won't cost you much more at all and provides you a superior solution, and you don't have to go through underwriting. Would you be interested in learning about it? Who wouldn't be, right? So that's important. I have one slide that would further clarify how our pricing position looks like today with our joint with the third pool. And I just want to share that, Don, just to kind of drive the point home. You'll notice on the left side, this is a 55-year-old couple, a $6,000 a month benefit for 3 years. And you'll see on the left side our annual premium for both the joint policy and that third pool. And when you do the math, present value, the day this client decided to apply and take possession of this policy, $6,300 a year in premium will give them $657,000 worth of tax-free money for their long-term care. And you can tell if insured one were to go on a claim and exhaust his policy, he's got another 3 years to draw from. So for more significant claims, it's available for them to draw from. Compare our approach to our other traditional counterpart. I won't say the name of the company, but let's just say that they do a lot with the animal kingdom. They have the shared care model that I described earlier. So you're paying a lot more premium, $7,500 a year, for only $432,000 in purchasing power. In other words, I have 2 policies, and if insured one exhausts his 3 years, he has the ability to take 2 of the 3 years that his spouse or partner has, leaving that person compromised in their benefits. So I like the way we do shared care better. I think either solution is great, but I like the way our approach is a little bit better.
Yeah, it just gives you such a bigger benefit. It's just for adding the shared care, and you can see the premium, just the difference. Sorry to interrupt, but yeah,
that's right.
It's kind of a no-brainer. When you're on the table, you kind of see that, and you're like, okay, you just lean one way.
Exactly. And what the moral of the story is to this approach is that if I'm competing with a carrier that's selling a 4 or 5 year shared care, I can come in with a less expensive, shorter duration solution. Say, for instance, I call the 3x3x3, where one person literally can have 6 years worth of benefits, and you're offering that opportunity in many cases for less premium than my competitors 4 year with shared care or 5 year with shared care. So it's a real efficient way to approach couples. And quite frankly, that's why we already pretty much dominate that market. When this new product comes out and we look at the new pricing with our chief competitor, all bets are off. We'll play well in the individual space as well. And you know, Don, I think those are the big points I wanted to raise today. Anything else you'd like me to cover?
You know, it's really the biggest one, and NGL, whenever we're talking with the shared care or how that option works, with being that third bucket, it just gives them so much more benefit. Just looking at it, if you're a single or if you're not married, not married or anything, if you don't have a couple, there's the other options. But to have that extra $220,000, that's huge. But taking it with that, when you're talking both policies, so you were talking about if one partner uses all or pretty much most of that third benefit, the surviving partner can drop that coverage. Can they drop it if they've used the whole thing, the whole benefit for that third bucket? It doesn't matter, or can they? So it doesn't. So it reduces their premiums just to get rid of that benefit if the partner that's using it uses the whole thing, is gone. So they can lower their premiums and still have their full benefit that has grown, right?
That's correct.
That's correct.
That is correct.
Use everything.
Yep, they can. That's a real good point. And I'll raise one other important point too, from a tax standpoint. A joint product versus an individual product. When you look at the other traditional carrier on the right side there, that $7,533, that is composed of 2 separate policies with 2 separate premiums, a male and a female premium. So you have that going on there as far as 2 separate policies. With our joint policy, that's $6,300, right? That applies to both individuals. So if they, for some reason, wanted to run this through their business, or for whatever reason want to itemize their premium, each individual can itemize $6,377 from the allowable amount that's offered by the IRS through IRS code 7702B. So there's a more advantageous itemization opportunity with the joint policy versus 2 individual plans.
Yeah, I agree, 100%.
Yeah. So that's kind of where
So,
we are. Go ahead.
yeah, for contracting wise, it's not going to change anything, with people that, need to get contracts. So if they need to be appointed, do they have to have that first? I know there's certain states that are just in time, or you have to be fully appointed to write before you can actually do a case. Is there anything in contracting that we want to make sure? We know we want to get you contracted first, so you're fully in compliance and all of that stuff. But do you have anything on that you think about that we need to say?
That's a real good point, Don, because a lot of carriers will withhold an appointment until a piece of business is submitted. We don't care. We will get you appointed in what we call a preliminary appointment status. So you're active with us, you have access to everything NGL. And then once you submit your first piece of business, then we formally activate your appointment. So you don't have to wait around and wait till you have a piece of business. Get appointed now through AIM. And then once you have your first piece of business or your second piece of business ready to submit, once that is received and placed, you'll get paid and we'll activate your appointment.
Perfect. And I know going onto the portal is a pretty simple process. You log in, you get logged in, and you have access to everything from illustrations to EF to marketing materials.
Yeah, even if you're not even appointed with us, you just register through the agent website. It's NGLLTC.com is one way to access it, and you can register and kind of look around and get a feel for who we are, play with the illustration system if you want. But of course, everything through AIM, they make it a lot easier. You don't have to worry about that. So that's a good news.
So in wrapping it up, I know you got another call coming up shortly. If you need to get contracted, if you have questions, everybody that is on the call here, we're going to actually reach out after the call. The marketers here will reach out to you. If you have any questions, if we need to get Larry, we can get him involved too. He's great to bring on the phone and go over different things. But Larry, if we don't have much else, I want to make sure we get you out of here on time. So appreciate you being here. Anything else you want to say before we break off?
No, not you. You all are very fortunate to be working with AIM. You all know that already since you've been working with them. Great operation. We're very, very happy and proud to be part of AIM's business. And yeah, like Don said, I'm at his beck and call. So anything he needs, he has. So I appreciate you bringing me on this morning, Don. I really do.
Larry, we appreciate it very much. Thanks to you, and thanks everybody for being on. Hey, everybody have a great day. We'll talk to everybody later.
All right. Thank you, sir. Take care.
All right. You're welcome. Bye.
Bye-bye.